Hello and welcome back to Core Finance for the second of 3 videos today with Mike van Dulken, Head of Research at Accendo Markets. Mike, what are we looking at in this video?
So here we're looking at sterling euro. I know I have a habit of bringing this FX pair here in reverse, so most people look at it euro sterling, but this is to show indeed the relative strength now of sterling of late versus the euro. I think when I was last here we were still knocking up against that 114, the reciprocal of which would be more like 86 on euro sterling. I think what's interesting is we're still there and we're still pushing to the upside, which suggests an appetite for a bullish breakout, which could take us back to 120 or 0.8, whichever way you want to look at it. We had the German election over the weekend, which was a less convincing win for Merkel, and it'll mean a change in coalition, but it also shows the rising appetite for more populist politics, if you like, with a real surge from the AFD party, which is more anti-immigration, more extreme far right. They're straight into Parliament. They've gone from I think a 5% share to a 13. I mean, they've done as well in terms of improvement as Merkel has done in losing ground. So if we do see further weakness in the euro on concerns about how the new coalition plays out, that could be the driver that helps us with a breakout for sterling that could take us back to 120. On the flip side, in terms of sterling, Prime Minister May's speech on Friday seemed to appease to some of Europe that we're at least moving in the right direction to unblock the kind of stalemate negotiations. I think we need to see if that actually proves to be the case. Today's the first day of the next round of negotiations. Let's see if we can move forward a bit. If it takes us away from the hard Brexit and the cliff edge that everyone's so fearful of, that could indeed be a second driver for sterling to the upside.
Fantastic. Well, we'll look forward to that, and certainly, just briefly, it probably helps Prime Minister May to have a stronger pound and stronger economic data coming through when she is negotiating with the European Parliament, just to strengthen her hand. Well,
it may well be a double-edged sword. I mean, apparently the weaker pound was what was benefiting the economy and making things A-OK for all the companies who want to sell their wares elsewhere. If it does get too strong, we might get too much inflation, which might need a rate hike from Carney and Co., which could send it even stronger, which could be actually a negative for UK companies. So, but both she and Carney are probably in a difficult situation. She has to talk positively about Brexit and move us forward, because we cannot afford to waste any more time. We're already a quarter of the way through the negotiations. Now, if we've had the transition period on, that does extend things, but you'd likely want to have everything done and dusted before the transition period even begins.
Well, lots to look forward to that. Mike, thank you very much for joining us today.
Thank you.